Good afternoon, guys. Good to see everyone here. My name is Andrew Geisel. I'm one of the co-founders of Citizens Coffee. I have my business partner and co-founder, Justin Giuffrida, digitally sitting alongside me. We wanted to welcome you guys all to our Q4 review webinar and our investment webinar. We're just going to give it a couple of minutes as we wait for our additional attendees to join the webinar.
Hey guys, hey everyone, super excited to get stuck in today and to go through our year in review and to do a bit of a walkthrough of our concept, our vision ahead, and then to answer all the burning questions that you guys have as well. And so super excited to hear everyone's thoughts and questions as we go. But yeah, guys, just wanted to say a quick hello and welcome.
Alrighty, guys, just as we wait for the remaining people to join, just a quick summary about what we're going to talk about today. We at Citizens have been working very hard. We got a lot of good news to report about our past quarter. We're going to be looking at how the company performed financially. We're going to be looking at our new store development. And then later on in the presentation, Justin's going to take us through some more details about the investment opportunity. I know that we have a bunch of attendees here who are looking to learn more about investing in Citizens. And we're also going to host a Q&A just at the very end of the presentation. So if you do have any questions, you'll see a tab in the bottom right-hand corner. Just go ahead and post those questions. We're going to try to get to as many of them as we can. And yeah, really excited. So on that note, guys, let's go ahead and kick it off. I do just want to say a quick thank you very much to our current investors who are on board this call. I can see there's a bunch of you. Guys, thanks so much for joining. I'm really looking forward to taking you through the progress we've made. We've got some really exciting updates and announcements. And again, everybody who's here and has interest in investing in Citizens, thank you for being here too. We hope this can be of some value to you guys and you can learn a little bit more about us and our company. So without further ado, let's dive directly into our Q4 review. It's been a really, really busy one for us. At Citizens, we never stop. And those of us who have been following the journey know that there's been a few updates along the way. So we are mid-build for our first ever Austin, Texas location. We're going to be diving into this. We'll see when we get to the financials that we've actually broke our Q4 records for company performance. And in our industry, it's not good enough just to capture great sales. What you need to do is capture them well. And what we mean by this is turning first-time customers into regulars. So we've spent a lot of time over the quarter optimizing our growth, making sure that we're turning these first-time customers into regulars. And it's been a tremendous effort. And finally, earlier this year, we launched our CPG division of the company. We started shipping our coffee, our K-Cups and espresso pods nationwide to our fans, followers, and believers. And we've been working hard to optimize and build that program of our company as well. So kicking on, we're going to start with our financial performance review. What we can see here is we've had a really, really tremendous quarter. We're projected to finish on $2 million in sales for the quarter this year. And this is in comparison to $1.5 million in sales for Q4 in 2023. Right, so we've posted a year-on-year growth of 25% for this quarter. And this is something that we're really, really proud of. I think it's a real tremendous achievement. Within the food and beverage industry, you're usually looking for 3 to 5% as healthy growth year on year. So for us to be posting numbers of 25%, we're seeing significant growth. We launched into Houston, Texas in 2023. That store is growing rapidly. It's really quickly maturing. And it's showing that even our fundamental markets of New York City, even years in, are still growing year on year. So we're really proud of this performance. If we take the annual sales numbers, we're on track to do $7.2 million in sales this year. And that's up 14% from the year before. So again, just a really strong demonstration of comp growth. And we're going to dig in a little bit later into how we've been able to do this. Finally, our store level profit of 15%. It's really important that when you are making sales, you are capturing them in a way that is profitable and running the business profitably. So 15% profitability for the year is really, really healthy. And as we continue to open more stores, the goal is that this 15% profit number will begin to cash flow additional units. I want to quickly touch on some of the levers we've been pulling to generate our sales. We really believe in the Citizens Mousetrap. We think our product is top standard. We think our experience and ambiance is the gold standard of brunch. So the question becomes, how do we get ourselves in front of more customers, and how do we spread the word of what we're doing? This year, we've really doubled down into social media marketing. We're finding that this is the most powerful and effective way to harness our marketing efforts. And when we say social media marketing, I'm not talking about spending money to invite influencers in. The program is purely based on inviting these influencers, these people who have communities and networks that we'd love to tap. We simply invite them in to our restaurants to show them what the Citizens experience is, and if they love it, to share it. We really started ramping this program this year, and I think it really has made a big impact into why we're comping growth so well. The next is the development of our alcohol program. When we launched our Houston, Texas location, we reinvented a lot of pieces of our brand, and one of them was the alcohol side. So we came up with a brand new full alcohol menu, full, freshly made cocktails. And this not only enhances the brunch experience for our guests, but it's a really profitable center, and we're seeing that raise the average check. So that's something that we have since rolled out back into New York as well. It's been a really big hit for us this year and for this quarter. And finally, we have improved SEO visibility and recognition. So for us, the question really becomes, how do we become more visible, more loud, and more proud so that we can get in front of more people, right? And in this day and age, over 90% of people are finding their restaurants through a Google search, through typing something in on their phone. So we've spent a lot of time and energy this year optimizing our SEO so that when people are searching for best brunch, for breakfast in New York, for coffee in Houston, that we're in the list of the first ones that pop up. So these have been a couple of our initiatives, and I really think they're starting to pay dividends. Next is new store development. So for any of you guys that have been keeping up to date with the information we've been leaking, you would be aware that we are opening in Austin. It's going to be our first location here, and it's due to open Q1 of next year, so only a couple of months away. This is a really landmark moment for Citizens because we are extremely bullish on the Austin market. We waited years to find the right opportunity here because you only get one chance to really come to market strong. And as we can see, it's due to deliver in a couple of months. Once this store is mature, it's going to be in the region of $2.8 to a $3 million store. And it's really important that we're launching this one correctly because this is not a one-store market. Whenever Citizens comes to a market, it's with the ambitions of opening more stores, and we want to expedite that process in Austin. We really believe that we want to open store 2, store 3, and store 4 within the next 24 months. But we obviously walk before we run. We start by having a really, really great launch of our first Austin location. You can see a few of the renders attached below. It's going to be a beautiful representation of the Citizens image. And we'll keep you up to date as we get more announcements of getting closer to opening. Additionally to launching this Austin store, the biggest part of my role in leading the growth and development of Citizens is ensuring that we have the correct pipeline for growth, right? A lot of people look at expansion purely as a function of capital, raising $1 million and growing, right? The truth is the money is only half of the battle, right? I think the more strategic side of what we need to do here is have a really articulated development plan, a really detailed pipeline of real estate options that we can action when the time is right. And that can't be done in a few weeks or months. This takes constant analysis of markets. It takes having the right partners, boots on the ground, the right real estate team in place so that you have a pulse on all of the trade areas, on the markets you want to be in, how you want to sequence them, how you want to come to market. And this is the process that we're leading now. We're doing a lot of work in New York, Houston, Austin, and Dallas. We're seeing a lot of LOIs, we're seeing leases, and we're building this pipeline so that when we get to the point and we're capitalized and the investment round close, we can really start to move at scale. So you can see the 2025 and the 2026 sort of location pipeline. We're actively looking in these spaces now and trading papers on LOIs and getting appropriately prepared so that we're ready to go into this next phase of growth. Next is product and brand development. At Citizens, I think we have the responsibility constantly to be showing our guests what's new, what's exciting, and what's unique about what we do. And for us, that's innovation in the brand. It can be in the format of product, it can be in the format of experience. And I want to take you guys through a couple of the things that we've been doing over the past quarter. Um, you know, in the past quarter, we launched our Draft Nitro coffee program, and this has been amazing. We basically keg our own nitro coffee at store level and have it fresh on tap. And you can see the attachment of the menu above. There's some really fun, flavors and dishes. The nitro salted caramel latte, nitro Nutella hazelnut latte, even a nitro blue matcha and lavender latte. This stuff tastes great, but most importantly, the response to the product's been really awesome. We're seeing it pushed all over social media. It's getting a lot of that organic marketing to it. And I really think it's another one of the unique pieces of our business that we want to really celebrate. I think we have to really know clearly what is it that Citizens does that you can't get at the local, whether it be diner or coffee shop or restaurant down the road. And this has been a real hit for us. It's currently rolled out in Texas, and is due to be rolled out back into New York at the start of next year. Additionally to this, you've heard me speak about the CPG side of our business. This is something that we are hugely excited by. So earlier this year, we started shipping our coffee nationwide, as I mentioned, and we've got our roasted coffee beans. You can see a little picture of the production factory that does our K capsules, Nespresso pods as well. And it's clear to us that the current experience of Citizens has been within our four walls. And why we're so excited by this is now we have the opportunity to access our guest and to access our customer in their own homes or at their workplace or at the grocery store. So we're currently underway with developing a few nice little additions to this program. We're seeing amazing sales come through for the current series of SKUs, but I think we have opportunity to add more origins of coffee, to more blends and different offerings there. We also have new actual product categories that we want to launch. We're really interested to add a pouch cold brew product. And it's just true that coffee, more so than ever, is getting made at home. And we want to be an active part of this. I think we have a full segment of brand believers and people who love Citizens that are looking for a way to bring that experience to themselves. So yeah, very excited by all of this. Investment progress. Justin, in a moment, is going to take you through more about the opportunity at hand, but I wanted to take us all through where we're at today. Most of you on this call would be aware that we are currently raising on Start Engine. You can invest in us today. You can see from the screen grab, we're nearly at $500,000 raised in this current fundraising round of ours, and we're tremendously proud of that and super thankful for everybody who's come on board. We are moving this towards $1 million. That is the end goal. And the journey so far has been really exciting. So thank you to everyone that's participated. I wanted to touch on the fact that we are pairing this with a more institutional style investment, because we foresee the crowd as an important part. We also foresee institutional style investments as a really big part of our growth. And we're having these conversations today with some really interested parties, groups that are interested at investing in the ballpark of 3 to 4 million. And it's our feeling that by bringing these two formats of investment together, we're best equipping Citizens with a huge injection of momentum and capital to really push hard at this expansion and go nationwide and get to this landmark number of 40 stores by 2029. So hoping we can have some even more exciting announcements for you guys at the end of next quarter. We're hoping to have some of these more institutional partners closed and secured. But I think at this point, this is a good time to throw it over to Justin. For those of you who are newer to our company and want to actively learn more about what this investment opportunity looks like, Justin's going to kick all of that off now. So thanks so much, Justin.
Awesome. Thanks, Andy. Yeah, really, really nice recap of the year that we've just had. And guys, for those who don't know me, I'm the CEO of Citizens and one of the founders alongside Andrew. Our jobs are pretty distinct in terms of, I lead the day-to-day, the financials, to drive the operations of Citizens. And I like to say that Andrew, pushes us forward in terms of real estate development, marketing. So we're kind of the two heads of a growing, young team with big dreams. Guys, I'm going to take you through. I know we've got a really nice mix of current investors and prospective investors on the call today. So I'm going to just quickly take everyone through the kind of concept and the vision of Citizens. I'll try to keep this, in around 7 to 8 minutes. And then we're going to open up for everybody's questions and thoughts, and really encourage everyone to ask us anything that's on your mind, any questions about the concept. So hope that will make for a really nice discussion. But guys, the first thing I like to kind of open up with is that Citizens and the restaurant industry is unlike other industries in the sense that it goes through change and it goes through evolution. And, to paint the picture of where Citizens is today and the opportunity that is in front of us, I like to tell the story of some of those evolutions. Some really obvious ones that we all know about today is that, one of the first evolutions of restaurants was the car and bringing about the Michelin guide. That really spurred customers, to be able to travel and to be aspirational about all the restaurants they want to go to. So there was born fine dining. Then the famous drive-through came to America, and we had really big brands like McDonald's pop up and introduce convenience to the picture. One of the latest evolutions in the industry is fine casual, and we've seen brands like Chipotle, like Starbucks be introduced to the market with just absolutely unprecedented success of growth and scaling, because the approach of fine casual introduces what fine dining restaurants do in terms of the product. So the food, the beverage being really well sourced, really well cared for, and just really high quality, but stripping away all of the kind of, luxury items of a fine dining experience. So things like maitre d's, things like, really expensive booking systems and, large operational teams. We see brands like Shake Shack, like Starbucks, like Chipotle deliver great food for an accessible price. And so that brings me to the breakfast and coffee segment. Our segment of breakfast and coffee is undertaking huge amount of change, and that change is coming off the back of some brands' big success. And one of those drivers is Starbucks. Now, we call Starbucks the green wave because they have just absolutely evolved the way that America consumes coffee. They took us from Peet's coffee in a can and introduced espresso technology and culture to the United States. And, there was born espresso drinks like cappuccinos, lattes, frappuccinos. And so through their evolution, they've evolved the US next generation of what consumers are demanding. And in particular, young consumers. And they're the next generation of consumers in this country. And so now as they mature and the next generations come up, they're demanding a higher quality and upgrade on what is currently offered in breakfast and coffee today. Those customers who have kind of grown up with Starbucks, now they want the next most innovative, better quality, better sourcing, better experience. And so, that's where Citizens comes into the fold. Now, you can probably hear it in our accents that we're not originally from this country. And so I like to paint the picture of this market evolution by saying that the Australian market is really advanced and ahead when it comes to the coffee and breakfast industry. And we're still one of the global leaders in breakfast and coffee today. And one of the clearest depictions of a case study is when Starbucks entered the market of Australia in the early 2000s. At this stage, they had over 25,000 locations across the world, the most successful and dominant player in the coffee space. And inside of 8 years, they closed over 80 locations in Australia and weren't able to enter the market. Now, that's not because Australians don't like coffee, because we absolutely do. We're crazy about it, like you guys, like American and the rest of the global population. But what it is that Australia has such a high standard and high product quality that Starbucks weren't able to enter and crack the market. So now, we're bringing that history, that technology, that execution to America in the form of Citizens, and we have so far had results that we'll tell you about today, that we're already at this early stage showing real promise and results to win the space over the long term. So, a lot of people ask the question, well, how is Australia so advanced when it comes to coffee and breakfast? And it really is in our history. of being, we still have our British heritage of the English breakfast, but we also have a big heritage of Mediterraneans, Italians and Greeks, who brought to Australia at a very early part of Australia's evolution espresso technology. And so Australia has had espresso technology and the English big breakfast fusion, and has really innovated and evolved really quickly over the last, couple of decades to really become the global leader. And so walking into an Australian cafe like Citizens, you get a sense of chef-driven menus, really fantastic sourcing of high quality ingredients and put together with inventive twists. So all of our breakfast menus are breakfast, but different and really high quality and innovative. Also, we offer specialty coffee that we roast. We source our coffee direct from farms ourselves, and we freshly roast it in Houston and supply all of our locations. And that same fresh coffee goes into our CPG products shipped across the country. We also specialize in craft cocktails, and of course, fantastic best-in-class hospitality and service. So our baristas and our servers, they know you by name, face, and order. So we have that really rounds out the package of best-in-class product and best-in-class experience. So guys, that really paints the picture of Australian cafes being the next generation of what breakfast can be in this country. And, this concept is not new. We've already seen legacy brands like Starbucks introduce drinks like the flat white and try to introduce avocado toast in their menu. Those are indicators that big brands today are trying to import these concepts that are in the next phase into their customers to try and get ahead. But Starbucks is just so big and rigid already that they're having a lot of trouble, moving into the next phase of what breakfast and coffee can be. And that's why we're starting to see the earnings reports and stocks really drop. And now comes a new space to be won by young brands like us. So guys, I talked a little bit about what we are. We're two concepts under one roof. We're a full service breakfast restaurant where, we have our teams taking your order at the table side. We offer full service breakfast, cocktails, coffee, and we also do a big to-go channel as well. So walking into a Citizens, you see a dining room full of 100 guests having breakfast, really bustling restaurant. And then we typically have a line out the door for coffee and baked goods and food to go as well. So we're typically two concepts under one roof that really help us compound powerful economics. We've got 4 locations now across New York and Texas markets, New York, Houston, Texas, and now soon to be Austin. To date, we've taken in and recorded over $27 million in lifetime revenue. So we've dealt with a lot of dollars and a lot of customers, and we have a lot of experience about who we are and where we're going. And we have a big culture of community impact and empowerment. We've got a lot of great initiatives at Citizens, like local legends. For those folks who have visited, Citizens will know how we play a really big part beyond our front doors and support the communities that we're in. We're moving to become a 1% company where we take a real strong portion of our revenues and bring it back into the communities that we exist in. And of course, we've got our newly launched CPG division. We know that the intersection of being a restaurant and a CPG company is extremely powerful. As our restaurant footprint grows across the nation, our CPG will really grow and scale with it. And that intersection will open ourselves up to bigger economics and bigger subset of merger and acquisition potential partners down the road. So that's why we've invested in time and resources at this early stage to diversify the brand. Guys, these are some of our locations that we've got across our markets. Austin's not yet listed here. And we've got here listed at the bottom right-hand page some of our Google reviews. One of the proudest parts about Citizens beyond the economics is that all of our locations have 4.7 or more on Google reviews. Alongside strong economics, our guest sentiment is sky high, and that's something that we take incredibly seriously at this early stage to know that the concept is being well received and there's real traction here. Move on. See, here's some of our beautiful drinks and food. Some of the mantra that we live by is that the food, looks and feels as delicious as it tastes. So you can see a lot of really well presented, bright ingredients. This really adds to our guests' experience at the table as well. You can see we've got some fresh juices, beautiful looking lattes there, cocktails, and on the right hand side, some of our real beautiful brunch breads as well. Here's a little bit about our new division of CPG, our Citizens at Home range. We've got such a beloved following of coffee and product at Citizens that the time was right to go beyond our four walls and enter the CPG division, which allowed us to supply our customers not just at the restaurants, but at home, at the grocery store, and at the office. So now we can be a true national brand that has all the touch points in restaurant, at home, and at the office, and really become at the forefront, touching all the points of our customers' daily lives. We think that this is going to be a huge opportunity. One of the studies shows that pod coffee is set to overtake instant coffee in this country, which is a huge, huge opportunity. And so we're investing heavily in espresso pod coffee and K-cup coffee alongside traditional coffee beans. Here's some of the press that we've received at Citizens. One of the proudest parts about our brand is we haven't spent $1 on marketing. A lot of this is organic traffic. And this PR and press, and these are publications that we all read on a daily basis, like Forbes, Vogue, QSR, Fox News. A lot of this press is brought about by our daily execution. We understand that if we execute at a high level, best in class every day, then big publications alongside customers take notice. And so that's why we have such a heavy social media following and such a loyal following in terms of our guests and customers. And PR follows those trends. So we're really proud here about the PR, but also just as proud about the best-in-class execution that we bring every day, which garners the attention of publications like this. Some of the brand highlights that Andrew talked a little bit about is we've got locations across major markets. We've been around since 2017, so we've got an extended track record of success. We've got a best-in-class AUV. AUV is average unit volume. So about $2.6 million per location is our average sales per year. That really is an impressive stat when you put it in contrast to Starbucks' $1.4 million per location. Our 2024 EBITDA unit level is estimated to come in at $1.1 million this year. So we're very profitable at unit level. We're set to see that grow as our operating leverage grows. So as we get bigger, our supply chain only gets more efficient as we've got more negotiating power with our vendors. Annual sales coming in at 7.2. We talked a little bit about lifetime revenue. A really impressive stat is that 35% of year-on-year same-store sales growth. So even our oldest location is still growing well beyond CPI, is growing over 35% year-on-year. So we see even when our locations mature, the sales are still organically growing, and we're still seeing our customers build out our economic model, even in our oldest locations. We believe there's a long-term opportunity here of 500 plus stores. We see that there's a ton of white space in this country. We've proved the model works in an urban tier 1 city like New York, and now we're proving that it works in Houston, Texas, and we're soon to be proving that it's going to work in Austin. And so we're starting to prove out this thesis that there's a lot of white space in this country, and where we can see that we've got an opportunity of at least 500 locations across the nation. And that's not considering global expansion as well. Here's some of our investment overview, which is a really interesting page for prospective investors today. We've talked a lot about what we've done in the last year and where we want to go, but this just gives a really clear look at our pathway to scale. And so all the way to 2029, we've got a very clear pathway that Andrew's building in real estate and that we're building in operations and brand to achieve 40 locations. Now, we know if we get to 40 locations, based on our average unit volume that we've already historically recorded, we can achieve over $100 million in annual run rate sales. And we can just continue the current model that we're operating at and continue best-in-class profitability. Now, if we can raise a little bit of capital along the way and use our profits to really compound our growth, we've got a very strong economic model to take us all the way to 40 locations and 100 million. We see that the $100 million sales mark is a very strong traction and brand inflection point where that will start to attract very strategic M&A partners, strategic buyers of the brand, investors, and that is a really strong milestone for a young emerging brand like Citizens today. And of course, we need to scale our CPG to high velocity. So what does high velocity mean? It means that every market that we exist in and across the country, We want to be available direct to consumers' door via shipping. We want to be in national grocery chains like Kroger and Whole Foods across the country. And we want to be highly accessible in the office and at home. So if we can do that alongside scaling our restaurant footprint, we know that we're going to have a household brand. We'll move into case studies. So these are some of the major case studies that we look at every day at Citizens as a guiding light to where we need to reach to really be a successful high traction brand. So these are brands like Blue Bottle, La Colombe, and First Watch that are very similarly at the intersection of retail and CPG. Blue Bottle have locations all over the country, and La Colombe are predominantly on the East Coast. But they also offer a really high velocity CPG division where they do canned lattes, bottled cold brew, pod coffee. So we see that this is the growth path forward. And these case studies are only proven right by some of the recent acquisitions that you see on that page by household brands. So Blue Bottle was acquired and had a major investment stake by Nestle in 2017, valued at around 700 million, so just below $1 billion, with a store count of 90 and an estimated run rate of $70 million. La Colombe is a really interesting example, an East Coast brand that got to 30 locations with a really, really high velocity CPG division where they were doing canned lattes and, a number of kind of ready to drink options alongside some coffee retail. And they were at an estimated of $200 million in run rate. And just recently, last year, Chobani came in and acquired the brand for over 900 million. And then we all know First Watch, a national breakfast chain with over 420 locations that now has a market cap of over 1.7 billion. And they had an estimated run rate of 440. So it's pretty clear by using these case studies that if we can emulate and achieve our growth roadmap and get to $100 million of revenue with 40 locations, then we're really in the ballpark of being with these strategic investors and buyers. And that's a really great place to be that we're driving to for shareholder value. So anybody that's a prospective investor today, this is where we're going. And this is proven of recent mergers and acquisition data that we can read and find online. Here's some historical performance that we talked about a little bit earlier. We can see that our revenue is going up to the right and our EBITDA is following, which is exactly where we want to be. That's a big part of my job as a CEO, is making sure that our day-to-day operations are running smoothly, we've got high guest sentiment, and that we're profitable at unit level. This is a return to the crowd. So we've already done an equity crowd raise in 2021, and it was highly successful. We had a really big portion of our customers invest in 21, where we raised over $1.2 million, and we attracted some really notable investors who joined us as not just investors, but joined our advisory board as well. Some you can see at the bottom of the page was Randy Zuckerberg joined our team from Facebook, and Sean Davis, an MLS All-Star captain, joined our advisory team and joined on as an investor as well. So this is our return to the crowd a few years later to fuel that next phase of growth. This time we're doing a much bigger raise. As Andrew mentioned earlier on the call, we're doing a portion from the public, which is on the crowd right now, about $1 million. And we're almost at 500,000 raised, so 50% subscribed. And then we're raising a strong portion from the private market, more from institutional investors like VCs and private equity, which we've got conversations underway to fill that tranche as well. Since then, we've launched, since our last raise, we've had a lot of success. We've launched in the Texas market in Houston. That was launched last year in 2023. This year, we're about to launch in Austin, Texas. So we're now spreading across a new market. We've increased our lifetime sales by 170%. We've doubled our team size to over 100 employees. And we've now officially brought roasting in-house here in Houston, Texas. And we've entered the CPG division with a new whole channel of our business, shipping pods and coffee beans across the country and soon to be grocery as well. We've got additional markets in Dallas coming online soon as well with Andrew to make some announcements in the coming months. Guys, we like to say cheers, mate, is what we say from our homeland. And what I'd like to do now is kind of throw it over to Andrew to kind of take us through some questions and thoughts from the crowd. And yeah, super excited to hear everyone's thoughts and answer any questions.
Thanks, Justin. Guys, thank you so much for being a part of the presentation. If you haven't submitted your questions already, go ahead and put them down now. We see we've got a good bunch of them coming through. But yeah, go ahead and feel free to enter those. We're going to kick off our Q&A now. First question is from V. What compelled you to choose Austin as a market for citizens? I think this is a really, really good question, and it's a two-part answer. Any time that we consider the growth of citizens, it needs to have tangible upside and prosperity for many locations and many years to come. So when we were choosing Austin, it first has to be said we were attracted to Texas as a market. If we're going to inherit the risk that's involved in transporting our brand from New York all the way to Texas, it has to have the tangible upside, when and if it goes well. So we liked Texas as a market. It's very pro-business. The size of Texas is really appealing. And then when we look at how the markets interplay with each other between Austin, Houston, Dallas, and San Antonio, we foresaw a future in which if we can crack Texas, that state alone can host 50 stores. Right. And then that's the one side of it when you look at the market size. And the next part of it, of course, is customer fit. We get crazy about analyzing demographics and psychographics and understanding what the citizen's customer looks like. Where are they predominantly living? How do they spend their time? How do they spend their money? And it just kept coming back time and time again that Austin was such a high fit for us. It was very active, it was a very outdoorsy city, fairly affluent, such a booming city, one of America's greatest of that respect. And it has a market of people that really respond well to food and beverage. The restaurant scene performs really, really well. People are willing to invest into good ingredients and into good experiences. And all of these made for a really, really good use case for citizens to do well there. So we, of course, went to Houston first. That was quite the hit. And this will be our launch into Austin, Texas. So we're eagerly awaiting the opportunity to launch there, to show the people of Austin, how amazing Citizens is, and ultimately to earn the right to open a few more locations in that city. Thanks for the question. Next question. Will you become more profitable as you grow? Justin, I'll throw that to you.
Yeah, for sure. It's a great question. So I touched on this a little bit earlier in the presentation, and I think one of the interesting parts about scale is that we start to take advantage of operating leverage and economies of scale. So, just like we've seen recently as we've taken coffee roasting in-house, it allows us to have more leverage and more power in our negotiations, and sometimes not just negotiations with our vendors, but sometimes it means that when we're at a certain level of volume, we can bring those supply chain items in-house and manufacture ourselves and supply ourselves. So we've seen our coffee cost. Since we've brought our coffee roasting and sourcing in-house, we've seen our quality increase substantially, and we've cut our cost in that product by over 50%. So we intend to keep on doing that, increase our manufacturing, and be really strategic with our supply chain. And as we grow, we'll start to really take leverage and power in our supply chain, and that will start to really trickle down to the bottom line and to our net profitability, and we'll see our restaurants only become more and more profitable. So that's a great question. It's something that we're already seeing happening as we've gone from one location to two to four. We're already seeing those advantages start to get baked into the economic model.
Amazing. Next question is from Chris. I recently visited the Houston location in Montrose and saw the investment amount place cards. Do all of the investment amounts provide equity, or does only the highest investment amount give equity? So I'll take a quick first stab at this. Chris, firstly, thanks for visiting our restaurant. I hope you had a really good time. All of the investments through Start Engine to become an owner in Citizens are for equity. So what you're referring to is in the highest category of investment. At each category, there's an investment perk. And this particular category you're referring to includes advisory equity, which is basically additional shares in Citizens and additional opportunity to have direct contact with Justin and I and be a part of the advisory team. But I'll hand it to Justin just to see if there's anything that I've missed on that.
No, that's actually incredibly clear and accurate. Is that all of the investments are direct equity? You can see that on the Start Engine page, there's a price per share, so you can really get a sense of the valuation today, the share price today, and then I think a really good, I think for a prospective investor, you can see that some of these case studies by comparable brands that have achieved scale really start to obtain really high valuations when they achieve those levels of success. So, we want to really work hard to kind of fully achieve our growth roadmap and to achieve high scale and high traction in our brand, both in reach, locations, and profitability. And if we can do that, we know that we're going to, we'll attract some really great valuations and shareholder value for our investors and ourselves as founders as well. So it's a great question.
Amazing. Just time for a couple more, guys. If you have any last questions, please put them in. Next question, what does your next expansions in New York City look like? Guys, really good question. We're excited to open our next location in New York City, particularly off the back of this year's performance. I think to a degree, you would hope and expect that your immature stores, ones like our Houston location, are growing on a year-to-year amount that is aggressive because they're still maturing, right? It's what we would expect. Our New York locations are more seasoned and they've been there for years. And these traditionally are the locations which it can be difficult to get that really impressive year-on-year sales growth. That being said, New York has responded amazingly for us this year. Our Soho location is up at an astronomical amount, something like 30% year on year. Our Chelsea store, which is the flagship, we continue to feel like it's doing about the best numbers it can, and it finds a way to outperform itself year after year. So all of this paints really good use case for us being ready and having a desire to continue growing in New York. I think for our city growth, we're really bullish on the markets of or the trade areas of Upper West Side and Upper East Side. I think fundamentally there's good and strong real estate opportunities that do appear in New York City. There is a high turnover rate of business, and we can be opportunistic on that, particularly if we can get access to strong second gen ex-restaurant spaces that have a lot of the mechanics and the facilities that we can reuse. But I also think New York can be prone to having deals that are poor value. So you need to be willing to sit and to wait and to find that right optionality of the deal that makes sense. Because if we're going to open a store, it has to do really well. It has to be on the right economic terms. Simply, it has to be just that perfect piece of real estate. So we're actually currently inspecting a place on the Upper West Side. It's a market we've wanted to get to for a long time, and I think we could open there really successfully without cannibalizing any of our other stores, which of course is a consideration that we have to review. So I do hope in the months to come and the updates to come that we can report something of a signed lease in our next store in New York City, because I know Justin and I are both dying to do a few more there. All right, guys, that wraps it up for today. A huge thank you to you all for being here, to our current investors, to our prospective investors, and to the well-wishers. Thank you so much for being here. It was a lot of fun for Justin and I. We always really love the opportunity to tell a little bit of our story and a bit of what we're doing over here at Citizens. So, guys, if you do have any other questions, feel free to reach out to us. Feel free to engage on the Start Engine page. If you're curious about investing, please navigate over to our Start Engine page. You'll find the links all through our own website. And guys, if you're interested in becoming an investor, we'd be so glad to have you on board. And until next time, thank you so much.
Awesome. Thanks so much, guys. Everyone for everyone's time and participation. So thanks so much, guys. Have a great rest of your day.